Hey traders, this is Okana here, and I'm here with a strategy this time. I know I do lots of videos and trades based on price action and naked charting, support resistance lines, candlestick history, trend lines. But I know that for some of you, especially the beginners, that kind of trading is difficult. So you want something simpler to just start with, to just feel the market and test it on a demo. And so I thought I would share one of those simple strategies so you can start with until you master price action in addition. This one is recommended for beginners, best MACD entry strategy. As I said, it's quite popular, so it uses the MACD indicator, moving average convergence divergence. You can read more about it here. There's a link. I'll put the link to this article, strategy review, in the description, so you can check it out. And if you scroll down, you will find more information about the indicators involved, like stochastic, MACD. So it uses stochastic, a couple of simple moving averages, MACD. You can also look under our YouTube channel. If you search for MACD, you will find moving averages, you will find, and stochastic. You can just search here in the box, and you will find videos that explain moving averages and stochastic. So this is how it looks when it's all set up. I'm going to show you now how I set up my charts and explain the rules for taking call options and put options. So let's begin. First, what you need is the MACD. I have a custom indicator because I could set up the colors for it. If you can see here, we have the colors. So I picked the colors and the values. You can set them up when you insert the MACD. So you find it under Insert, Indicators, Oscillators, and you click MACD. So this is the standard MACD that MetaTrader includes. Fast EMA, set it up to 12. Slow EMA, 26, and 9 for the MACD SMA. Click OK, and as you can see, it's pretty much the same, just the colors are different and the bars are thicker, easier to see. So the colors make it easier to identify where the trend is going. And then what you need is an oscillator. I have a stochastic oscillator. So you go to Navigator here. You click stochastic. It's under oscillators. And then you drag it like this. You drag it all the way down and drop it inside the window. And before you click OK, you can set the K period to either 9 or 5. 5 is going to give you more overbought, oversold positions, more signals, but the 9 is going to be much cleaner, less noise. But we can try the 5 just so you can see. So here's how it looks. This is the difference between the custom indicator. I will put the link to this one below in the description as well. So let's go with this one because it's easier to recognize the green and red parts of the indicator. So once those are set up, you also need two moving averages. I will show you how to set them up. So you go to Insert, Indicators, Trend, and Moving Average. A 50 method simple. Okay, so simple moving average 50. And then once more. And this time double the period to 100. Still the simple. Okay, so let's go through the rules real quick. The first rule is the trend. So before you take a trade, you're going to look at the trend. In this case, we have the 50 EMA crossing. It's above the 100. So when the 50 EMA, this shorter period EMA is above the 100 EMA, you want to take call options because it's an uptrend. And the second thing you're going to look for is stochastic being oversold, which is near at 20. Try to take it when it's either touching or is below. when it's oversold, it's at or below the 20. But you don't take the trade unless the blue line of the stochastic is crossing the red line and going up. Okay, so another thing you have to confirm is that the MACD is, the bars are up, or in this case they're green, they're up and green, which means the market is going up. So MACD signals call options, the moving averages signal bullish market. So the third confirmation is the stochastic. So in this case here, once the stochastic was going up, was coming up, crossing the red line. So after probably after this candle here, after this blue line, it's blue candle, the line is completely crossed, and then you can execute the trade. There was also another signal here after this one. So depending on your expiry, which we'll talk about soon, you could have either won or lost the trade. We'll get to that pretty soon. Then you have another one here, but it's not really touching the 20, so it's up to your risk level appetite if you want to take it, but I would prefer completely oversold position, unless you understand price action, in which case you can trade it. So the third one is up here. This one is oversold, and then stochastic was coming up. It's green, full bars, nice, and the trend is up. Candlesticks above the EMA, good distance, indicating strong trend. So another call option here. And before we talk about expiries, let's go to, let me show you also the put options. So the rules are reversed. This time you want the 50 EMA, the lower period, shorter period EMA, sorry, a simple moving average, not an EMA. You want the simple moving average to be below the 100 simple moving average. Okay, it indicates a downtrend, and the market is going down, so that's good. So the next thing you want to do is to find areas where the stochastic oscillator is overbought, and the first signal we get is here. But you also have to check with MACD. So in this case, the bars are below the zero line, and the zero line is here. So the bars are below and they're red, so that's good. So the first signal is here, overbought, and when the blue the blue line of the stochastic is moving down, still red, that's the first signal, which is probably after this candle closed, the bearish candle. So somewhere after this candle. So the next position, it was here, again overbought, coming down after this candle, and the third one was here, and we also had a fourth one depending on your stochastic level. If you change it to 9, just to show you, you would have two signals, one here and then another one on this arrow, so 4 signals. So the expiry is the last thing I wanted to mention before we wrap this up. The expiry should be based on previous candlestick history. So if you would take price action into consideration, I know I say this a lot, but you should always look at the price action. Even if you're a beginner, try to look back, look at what candlesticks are doing, try to find support resistance lines. After you have tried this for a while, for a few weeks, you're getting comfortable with the rules, then you can start considering price action, because it's going to improve your results. So in this case, you're going to go back in time. So before we get our first signal here, or when we were about to get our first signal here, when the stochastic was about to come down, everything looks good. So we can go back and look at the tops before and see how many candlesticks would have been good for expiry. So we can see after this drop, 2 candles, 3 candles was good. After this drop, another 2, 3 was good. So after each top, you can see how many candlesticks were good, were in your favor. You have 1, 2 here, 1, 2 here would be good, even 3. So on average, maybe 2 candles or 3 candles. But the things change when the market changed. So during this period of time, 2 candles would have been good. But also because you're waiting, you see if the movement is too big like this, then you don't want to take too long expiry, because price can come back. If it's short, then maybe you want to have a longer expiry, so give it more time. So as you can see from this area, so 10 minutes would have worked. After this area, another 10 minutes would have worked. Here, after this candle, 10 minutes would have worked. And here, again, 10 minutes would have worked. So look at recent price action, see which is the most favorable expiry. And if the drops are too big, be careful. If you give it too much time, it's going to come back up, retrace back up. Let's look at the call options as well. Here you can see, so basically what you want to do is to go back in time and look at oversold areas and lows and see how much time it took for it to rise again. So this was our first call signal, so we would go back and see, here's a low. It's not oversold, but still it's a higher low. It's about to break the moving averages, so 3 candles here. If you will look at the oversold area, 2 candles here, so 2-3 candles on average. So where does the stochastic come up here on this candle? So yeah, 2-3 candles would have been a winner on this one. If you give it 4, would have been a loser. So as I said, look back and see recent price action. And then you got the second signal after this. Again, 2-3 candles would have been a winner. This one you could have taken this because it's bouncing on the EMA and closing above, but and based on price action, you see the support is holding, but it wasn't oversold. So if you're a beginner, avoid those areas. Here again, you get. Sorry, I misplaced my arrow. It should be here. So it's the last signal. The stochastic is coming up, full green bars, very nice, nice distance, everything looks good. So after this, 1, 2, 3, this time you would have lost. So a lot of winners, but you're not going to win all of them. Of course, you're going to lose from time to time. And the more you learn about price action, the better entries you're going to get. Then you're not so reliable on, so you're not so dependent on the stochastic getting turned, but you know when it's oversold and it's support, you're going to get better entries. So this strategy uses the 5-minute time frame. I have not tested it for above 5 minutes and above, but you can, if you wish, you can try it. But I think you're going to get less signals, but maybe more accurate. You can backtest and see. But the 5-minute is what's said in the article. And so read that. I will put the links below. And as I said again, focus on recent price history. Even after a few trades, you could go back and see, okay, so how has anything changed? Yeah, maybe now I get more candles. I need more time for it to come up. So take that into consideration. Backtest and let us know. You can also let us know in the forum of CommuniTraders in the strategies room. We can discuss if you go to the forums and scroll down to here, binary option trading strategies and systems. We can discuss, and you will find it here if you search for MACD, the best MACDs and strategy. So we can discuss it there if you have any questions. Okay, that's it for now. Remember the rules. If you forgot them, to rewatch the video or read the article. Thanks for watching.